Michael Saylor broke his promise. Here's why MicroStrategy fails. The man with the laser eyes just did the one thing he swore he'd never do. For the first time in 4 years, Michael Saylor sold Bitcoin. Just 32 coins, barely $2.5 million. But it was never about the size, it was the message. The most relentless Bitcoin buyer in history had become a seller. So what changed, and why does it mean the machine that built MicroStrategy is quietly breaking? To understand why those 32 coins matter, you first have to understand what this company really is. On paper, Strategy, once called MicroStrategy, is a software company. In reality, it's a machine for buying Bitcoin with other people's money. And that machine ran on one thing: a premium. For years, Strategy's stock was worth far more than the Bitcoin it actually held. At the peak, almost $4 of stock for every $1 of Bitcoin on its books. That gap was the whole trick. They'd sell new shares at that inflated price, use the cash to buy more Bitcoin, and because the stock was worth so much more than the coins, every share ended up owning more Bitcoin than before. The stock climbed, the gap grew, and they did it all over again. A perfect loop, money printed out of pure belief. Let's put real numbers on it. Say the stock trades at $2 for every $1 of Bitcoin. Strategy sells $100 million of new stock and buys $100 million of Bitcoin. Since the stock was worth double, that purchase adds more Bitcoin per share than it costs in dilution. Everyone already holding the stock just got richer, for free. That's the magic. Now flip it. Today that gap is almost gone, the stock is worth barely more than the Bitcoin inside it. So when they sell 100 million of stock to buy 100 million of Bitcoin, it adds nothing per share. It just splits the same pie into more slices. The magic doesn't slow down. It runs in reverse. Selling stock stops creating value and starts destroying it. The machine turns itself off. To be fair, this is not a sudden collapse. Nobody can force them to pay up tomorrow. None of their debt comes due until 2027, and Bitcoin would have to crash to a few $1,000s before anyone could force their hand. They even built a $900 million cash reserve to cover their bills. And here's the bigger point. Bitcoin doesn't need strategy at all. Their buying was barely 3% of all the Bitcoin traded each week. Bitcoin has already survived exchange blowups like Mt. Gox and FTX and even governments dumping their coins. It will keep going just fine without this one company. But here's the problem. Strip away the machine, and what's left is a small software company sitting on a giant pile of Bitcoin that's now worth less than they paid for it, owing roughly $1.5 billion in dividends and interest every single year. So how do you pay that when your stock can no longer print free money? You either sell shares nobody wants, or you sell the Bitcoin. That's why those 32 coins matter. It wasn't a trade, it was the first crack, a slow treadmill, where every bill that comes due quietly forces them to sell a little more Bitcoin, the exact thing the company swore would never happen. We've seen this shape before. There's a kind of fund that holds a pile of assets, and for a while people happily pay more for the fund than the things inside it are actually worth. That gap is a premium, the exact same premium we've been talking about, and it can vanish. Over and over, premiums like that have collapsed all the way to zero, dropping the price right back down to what the fund really holds. Strategy is that same story in a different costume. It's a Bitcoin fund the market agreed to overpay for on one belief. Take that belief away, and there's nothing left holding the stock up. So this is the real failure. Not a dramatic bankruptcy, but the slow death of the gap between the stock and the Bitcoin behind it. The whole pitch was that this company could turn $1 of Bitcoin into $2. Once the market stops believing that, the magic is gone. And all you're left with is a slow, expensive way to own Bitcoin, run by the man who swore he'd never sell, and just did. But if Strategy is now a forced seller, does it drag Bitcoin down with it, or finally set it free? Were you holding through any of this? Let us know, and we'll see you in the next one.